Today we are also joined in this press conference by the winners of the MPC Schools Challenge for 2016. They are the girls from Springs Girls High School with their educator, Miss Rachel Masaza, and the deputy principal, Miss Heather Jones. Congratulations and welcome. Let's get to the business of today. The UK vote to leave the European Union has dominated the global landscape in the past month. The outlook for the global economy has become more uncertain as the potential consequences of these developments are being assessed. The lack of clarity regarding the process going forward has had significant implications for global growth and interest rates as the prospects for further near-term monetary policy tightening by the US Fed recede. While there has been spillovers to the South African financial markets, particularly the exchange rate, the direct short-term impact on the South African growth and trade is likely to be fairly limited. Domestic growth has surprised further on the downside, and the outlook remains constrained. At the same time, domestic inflation outcomes have surprised marginally on the downside, but an extended breach of the target is still expected. The year-on-year inflation rate, as measured by the Consumer Price Index, CPI, for all urban areas, moderated to 6.1% in May before rising to 6.3% in June. Food price inflation measured 11% in June, below the recent peak of 11.3% in April, and was marginally negative on a month-on-month basis. Goods price inflation measured 6.7%, up from 6.6% in May, while services increased by 5.8%, up from 5.7% in May. The bank's measure of core inflation, which excludes food, fuel, and electricity, measured 5.6%, up from 5.5% previously. Producer price inflation for final manufactured goods continued its downward trend, declining from 7% in April to 6.5% in May, mainly due to a further moderation in price inflation of food, beverages, and tobacco products. This was below the consensus forecast of 6.9%. The impact of the drought is still evident in the increase in prices of agricultural products, particularly cereals and other crops, as well as live animals and animal products. The latest inflation forecast of the bank shows a marginal improvement compared with the previous forecast. Nevertheless, inflation is still expected to accelerate further this year and is only expected to return within the target range of 3 to 6% during the third quarter of 2017. Inflation is now expected to average 6.6% in 2016 and 6% in 2017, compared with 6.7% and 6.2% previously. In 2018, inflation is expected to average 5.5%, marginally up from the previous forecast. The expected peak at 7.1% in the fourth quarter of 2016 is down from 7.3%. The downward revisions are due in part to lower administered price inflation, despite a small upward adjustment in the international oil price assumption. The forecast for core inflation is lower than the previous forecast in the near term, mainly due to the lower starting point, but higher in the outer period. Core inflation is expected to moderate from an average of 5.8% in 2016 to 5.3% by 2018. Whereas previously, core inflation was expected to breach the upper end of the target range in the third quarter of 2016, For 4 consecutive quarters, a one-quarter breach at 6.1% is now expected in the 4th quarter of this year. Inflation expectations, as reflected in the survey conducted by the Bureau for Economic Research, remained relatively anchored at the upper end of the inflation target range. The 2nd quarter average expectations for 2016 were 6.3%, up from 6.2%. Average expectations for 2017 were unchanged at 6.2% and were marginally down to 5.9% for 2018. Expectations of business people were more or less unchanged compared to the previous quarter. Both analysts and trade union officials revised up their near-term forecasts, whilst forecasts for 2018 were revised lower. Average 5-year inflation expectations declined from 6.1% to 5.9% in the 2nd quarter, with downward revisions by all groups. The median expectations of market analysts, as reflected in the Reuters Econometer survey conducted in July, show a moderate decline since May. Inflation expectations declined from 6.7% and 6.4% in 2016 and 2017 to 6.6% and 6.1%. The yield differential between inflation-linked bonds and conventional bonds, that is, break-even inflation expectations, declined across all maturities but remained elevated. The global economic outlook has been influenced by the outcome of the UK referendum. The financial markets displayed a high degree of volatility in the immediate aftermath of the outcome, but have stabilized to some extent since then. Nevertheless, the longer-term real impacts are expected to be negative for global growth, particularly for the UK and Europe, as investment decisions are put on hold during the transition period. The high degree of uncertainty is expected to persist for some time, as the magnitude of this slowdown is still unclear and is dependent on the nature and speed of UK's disengagement. Since the referendum, global growth forecasts have generally been revised down. The outlook for emerging markets has remained relatively subdued, with further downside risks in Turkey following the recent coup attempt and terrorist attacks. Recent outcomes in China indicate some improvement in the growth prospects in response to government stimulus packages, and this has underpinned a stabilization and moderate upward trend in commodity prices. The IMF growth forecasts released earlier this week have revised sub-Saharan African growth downwards. The region has been negatively impacted by lower commodity prices and severe drought in some parts. Inflation in the advanced economies remain low and still generally below target. The Brexit vote has also modified expectations regarding monetary policy in these economies. Although the Bank of England kept policy rates on hold at its most recent meeting, expectations are for a reduction in the policy rate in the near future, with the prospect of a resumption of quantitative easing. Markets are now expecting the US policy rate to remain unchanged for some time. At the same time, the highly accommodative monetary policy stances of the ECB and the Bank of Japan are expected to persist, with the possibility of additional stimulus. These developments have reinforced the global search for yield, as yield curves flattened across major advanced economy markets. The number of government bonds trading with negative yields increased further. This has provided additional impetus to renewed capital flows to emerging markets observed since earlier this year. While these flows are expected to persist, They remain sensitive to changes in expectations regarding US monetary policy and general global risk perceptions. The recent volatility experienced by the rand exchange rate has been driven mainly by external factors and changes in global risk perceptions. Although the rand depreciated sharply in the immediate aftermath of the referendum, it has reversed these losses and more so against the British pound. Since the previous meeting of the MPC, the rand has traded in a range of 15 rands 80 and 14 rands 22 cents against the US dollar, and has appreciated by 11% against the US dollar, by 12.9% against the euro, and by 23% against sterling. On a trade-weighted basis, the rand has appreciated by 12.2%. The rand has been supported by the global search for yield. There was a sharp increase in non-resident inflows to the domestic bond and equity markets in June and July. Since the beginning of June, net purchases by non-residents of 107.3 billion rands have been recorded. The rand also responded positively to the improvement in commodity prices and the unexpectedly large trade surplus recorded in May, which followed a small surplus in April. Despite this recent strength, the rand remains vulnerable to possible risk-off global scenarios, changes in US monetary policy expectations, and domestic concerns, including the possibility of ratings downgrades later in the year. The domestic economic growth outlook remains extremely challenging following the contraction in GDP in the first quarter of this year. Although this is anticipated to have been the low point of the cycle, the recovery is expected to be weak. The bank's latest forecast is for 0% growth in 2016 compared with 0.6% previously. Growth rates of 1.1% and 1.5% are forecast for the next 2 years, down from 1.3% and 1.7% previously. The bank's estimate of potential output has been revised down marginally from 1.4% in 2016, rising to 1.7% in 2018. The growth outlook is corroborated by the persistent negative trend in the bank's leading indicator of economic activity. Business confidence remains low, with the RMB BER business confidence indicator falling to its lowest level since 2009 in the second quarter of this year. Recent economic data suggests that positive growth was recorded in the second quarter, with the mining and manufacturing sectors expected to add positively to growth. The more positive trend in manufacturing is consistent with the Barclays PMI, which has been above the neutral 50 level since March. The BER Manufacturing Confidence Index also improved, but still remains at low levels. The real value of building plans passed is indicative of some improvement in the sector, particularly with respect to residential construction. However, it is not reflected in the FNB BER Building Confidence Index, which declined further in the second quarter. Underlying the negative performance of the economy during the first quarter was the sharp contraction in growth in gross fixed capital formation for the second consecutive quarter by both the private sector and general government. These trends have contributed to the persistence of high rates of unemployment in the economy. Although formal non-agricultural employment increased in the first quarter of 2016, this was largely due to temporary employment opportunities created by the Independent Electoral Commission. By contrast, private sector employment contracted during the first quarter. Growth in consumption expenditure by households also contracted in the first quarter, with a sharp slowdown in expenditure on durable goods in particular. The FNB BER Consumer Confidence Index declined in the second quarter to low levels following a moderate improvement in the previous quarter. The BER Retail Confidence Index also declined sharply in the second quarter. Whilst new vehicle sales remained weak, vehicle exports recorded strong growth in the second quarter. Despite the surprise increase in retail and wholesale trade sales in May, consumption expenditure by households is expected to remain subdued given the low consumer confidence, high debt levels, rising costs of debt servicing, and slow employment growth. Consumption expenditure has been further constrained by the absence of significant wealth effects owing to the weak performance of asset markets, particularly the housing market. Credit extension to households also remains weak with negative real rates of growth. Average wage growth has remained relatively stable, but there are risks of increases in excess of inflation and productivity gains. There are as yet no clear signs of a recovery in the agricultural sector, and food price inflation is expected to remain elevated for some time. The bank expects food price inflation to peak at 12.6% during the final quarter of this year. There are some encouraging signs of moderation in some food categories at both the producer and consumer price levels, and future prices of grains have declined markedly. Should food prices stabilize or decline in the coming months, there is the potential for significant downside base effects next year. Exchange rate developments will also be critical in this respect, as will global food prices, which have reversed their recent negative trend. Despite supply disruptions and curtailments by a number of producers, the price of Brent crude oil has mostly traded within a band of $45 and $50 since the previous meeting of the MPC. The bank's model assumes a very moderate upward trend in oil prices over the forecast period, but there may be a degree of downside risk in the short term, with some upside risk in the outer period as global demand recovers. The domestic petrol price increased by a cumulative 60 cents per litre in the past 2 months due to both the exchange rate and international oil prices. However, the recent appreciation of the rand, coupled with a lower average oil price, has resulted in a substantial over-recovery in the petrol price, and a sizable reduction in retail prices is expected in August. The Monetary Policy Committee remains concerned about the weak economic growth outlook and the medium-term inflation trajectory, which remains outside the target range of 3 to 6% until the second half of next year. Nevertheless, there have been some improvements in the near-term inflation prospects following successive downside surprises. This is also the case for core inflation, where the expected breach of the upper end of the target range is now less protracted. Whilst the risks to the inflation forecast are assessed to remain on the upside, these risks have moderated somewhat. Global uncertainties appear to have delayed monetary policy tightening in advanced economies. The impact of the more appreciated rand exchange rate on the inflation outlook will depend to a large extent on whether the exchange rate is sustained at these stronger levels. Current exchange rate levels are stronger than those implicit in the forecast, providing some buffer to the projections. The rand remains sensitive to both domestic and external developments, and the recent trends can be quickly reversed. The outlook is clouded by uncertainty surrounding the longer-term market and global growth implications of Brexit. The implications for the rand and domestic growth and ultimately inflation could vary quite significantly depending on which scenario plays out. A weaker global growth scenario could also imply that there may be a degree of downside risk to the international oil price assumption, which was adjusted upwards. A combination of a stronger exchange rate and subdued international oil prices would have a favorable impact on domestic petrol prices in the coming months. However, the committee assesses the longer-term risk to this assumption to be on the upside as global growth and oil demand are expected to recover. Food prices remain an upside risk in the near term. There could, however, be a sharp decline in agricultural prices next year should favorable weather patterns transpire as forecast. The absence of demand pressures and weak consumption expenditure growth may also contribute to downside risks. Whilst the committee remains concerned about the overall inflation trajectory, the assessment of the balance of risks to the inflation outlook and the weak domestic economy has provided some room to delay further tightening of monetary policy stance for now. Accordingly, the MPC has unanimously decided to keep the repurchase rate at 7% per annum. The MPC is aware that some of the favorable factors that contributed to this decision could reverse quickly and remains ready to react appropriately to any significant change in the inflation outlook. So at this stage, let's turn to the questions. And as usual, please identify yourself and the media house from which you come from. And this distinguished panel here will deal with your questions. Right here in the front.
Thank you, Governor. I don't think you mentioned whether the vote, what the split in the vote was, and was it unanimous?
Yes, it was.
Okay, I thought so. And your downward growth revisions are pretty much in line with many other analysts and institutions, but 0% this year really is not good. Is there any risk at all that this could slip into a contraction? Thank
you. The back row. Oh, Hillary.
Governor, was there any discussion of a cut? I ask because certainly some economists have been starting to talk about when the first cut will be, and along with that, is there any possibility that this is the end of the hiking cycle?
At the back. She asked your questions. Oh, Hillary. Is that it? Growth at 0%, yeah. It is a significant revision. Could we slip into a contraction? At this stage, based on the data we have, we do not think so. But it is still a risk, as we spell out that the risks are on the downside. But just to give you a picture, after the contraction in the first quarter of this year, to achieve 0% growth this year would require growth of between 0.8 and 1% for each one of the remaining quarters. For us to achieve growth that we had at the previous MPC, which was 0.6, we would need to grow by between 2.1 and 2.5% for every one of the remaining quarters. So that tells you that the starting point, which was the contraction in the first quarter, has actually had a significant impact on the growth outlook. Hillary, was there any discussion of a cut? Well, when you go into that meeting, there are always three scenarios that could. It's either there is going to be a cut, a halt, or a hike. After an analysis of the data and a thorough discussion, I can tell you that there was no discussion of a hike or a cut. That's why we were unanimous about keeping the thing on hold. That as it may be, bear in mind what we are saying in the statement, that the risks to the inflation outlook remain on the upside. And should any of these disinflationary factors that had impacted on our decision today change or reverse, the MPC will react appropriately based on the data that would be coming our way. So we still remain data dependent, and as we say in the statement, that we felt that the recent developments and the outlook going forward had necessitated or had created some room for us to press the pause button on the hiking cycle. Yes, sir.
Afternoon, Governor. Foneko from Reuters News. In the speech towards the end, you say that the RAND remains sensitive to external and local developments. In terms of those local developments, can you go into a bit more detail into what those local developments are? Are they purely economic developments, or are they outside the realm of economics? Thanks.
Yes, ma'am. Funeko didn't steal your question.
I'm Khalang Bata from Bloomberg, Governor. Given that you've said inflation has surprised over the past months on the downside, and we had the gaining of the exchange rate, was there not enough room in the MPC's view to maybe cut at this point in time rather than pause? And also, just to reiterate a question that's been asked before, are we still in a rate hiking cycle, or did you choose to pause because we've reached the end of that?
Hillary?
Hillary Jaffe, Business Day, I forgot to say last time. Governor, when last was the committee unanimous in its decision?
You are testing me. The first time we had disclosed the debates that had taken place and in which direction people preferred the rates to go was in November 2014. There might have been one or two other unanimous decisions, but we can always go back and check into the record. I do write them in a little book like this, but I brought the one for this year. I didn't bring the one for last year. And then question about was there a question of cutting and not holding? Well, I think that I had been very clear that when getting into that meeting, in the deliberations, it was very clear that it was neither a cut nor a hike, which is why we ended up with a unanimous decision. I think that your question that you're raising of saying, why couldn't you have cut here? The thing about the interest rate path is that there's got to be certainty about where you are going. You can't chop and change as you are going along. And that is why data becomes so important. We have to constantly be looking at the data, and most of this data will be looking backwards, and that is why we have got clever men and women in our research department who take this data and try to look forward and say, based on this data, this is what we see is going to evolve, and that we were able to base our views on a forward-looking basis rather than on a backward-looking basis.
That's the Reserve Bank Governor Lesetja Kganyago, rational as always, saying that the bank makes these decisions on our interest rates that affects most people, especially if you're in debt in this country. Looking at the data today, the interest rate not changing. That was expected. That means the repo rate, which is the benchmark rate, which the Reserve Bank lends to commercial banks, remains at 7%. The prime lending rate that affects you if you're a customer of a bank, 10.5%. That's unchanged. The shocking announcement today is that the Reserve Bank is now expecting the South African economy not to grow. 0% growth. That means we're not expected to be in a recession where you see growth contracting for 2 or more quarters, but we're not expecting any growth this year, which is a real concern. And that prediction comes down from 0.6% growth predicted previously. So you can see how fast things are changing. Certainly not good news. We'll get some analysis on more of what the Reserve Bank Governor had to say with Elise Kruger and hopefully another guest after this short break. Do stay with us.
What's wrong with Triple M? What is illegal here? Who is being defrauded here, Trevor?
It is about the best interest of the citizens of this country.
But the citizens are the ones who are playing, who are members or participants in this. If you put in 15,000 rand, after 12 months you get 1.2 million rands. I mean, who wouldn't go for this?
Watch Question Time with me, Mpho Tsedu, Monday to Thursday at 5:30 p.m. on the SABC News Channel.
From the moment you start your day.
My biggest question is how I got myself here on time.
Yeah.
This is so early for a comedian, I gotta be honest.
We are there for you. We bring your morning into perspective.
As news breaks throughout the morning,
is an investment into the future of the airports company, but also the future of our children, the future of our country, the future of the transport sector.
We'll make sure that you get the full story.
Give us quality music.
Load shedding. Listen, this winter.
It's a thing of the past.
And you can count on the weather team with expertise.
Join us live at 6 a.m. daily.
For Spile, giving up was no option even in times of need.
If it wasn't for the opportunity that was given to me by the taxi owner, late Mr. Sibego, maybe I wouldn't be where I am.
The taxi industry is also occupied by people with a vision.
There are quite a few taxi drivers with at least matric. And they had a next door neighbor who owned taxis and they asked him for a job.
He now owns a law firm and he believes that challenges are meant to be conquered.
Once you step on top of them, you are able to be on another level and they remain under your feet.
He says hard work granted him his dream of becoming a lawyer of note.
I don't really believe in miracles. People work.
Join Puleng Molebati every Friday at 17:30.
Welcome back. We're bringing you a special broadcast following the announcement on our interest rates this afternoon. Reserve Bank Governor Lesetja Kganyago has just announced that rates will remain unchanged for now. Now, that was expected. We are in an interest rate hiking cycle, but we've seen those interest rate hikes actually coming very few and far with lots of gaps in between, and that's a result of the slowing global economy, our own issues with growth. To discuss, we're now joined by Elise Kruger from CAD Capital. She joins me in studio. Elise, welcome to you. A bit of a relief for indebted consumers that there's no change, but let's start with the shocker, which is 0% growth expected for this year. Surely if we have any room for error, that means a recession is possible as well.
Yes, indeed. I must say that was quite a big downward revision to growth, bigger than what I thought the bank would do today. You know, the IMF has recently come out with a 0.1 percentage point growth forecast for South Africa, and, you know, the bank was still at 0.6. So I thought maybe a 0.2 or 0.3 down. So that was quite a huge chunk that they've cut off, and I think it shows how concerned they are about what we see in terms of anecdotal evidence and the data that has come out in the last while. Having said that, you know, after the first quarter shock, and I mean, he mentioned that the base was part of the downward revision, the fact that we did get the minus 1.2, and I think the bank did not expect a minus at all, which they actually mentioned at the previous MPC meeting. They expect a very small positive growth rate. So I think they had quite a shock as well. But, you know, after that, we had quite a few positive indicators on a quarter-on-quarter basis, to the extent that, you know, we at Capital forecast about a 2.6% quarter-on-quarter growth rate in quarter two. So that will sort of reduce your need for higher growth rates in the second half of the year to still get to like a reasonable 0.4. So what I guess from that is maybe the bank's less optimistic about second quarter indications. You know, we still do need to get June's numbers. But yes, it was definitely a big shock to see such a huge revision downwards. And, you know, like you mentioned, if there's now suddenly any form of an additional shock onto the system, we could be in a recessionary environment. And, you know, that, you know, in a way to me is telling. I mean, I think the bank would not like to see negative growth rates going forward. And that might just be setting the tone for monetary policy in the next 6 months.
What you're saying, I've heard before that there are better indications. Some economists saying, look, we've seen a contraction in growth. We're in a tough time, but maybe better times ahead. But there's also a revision for next year, a downward revision for next year and the following year. We're looking at 1.1% and 1.5%. And this is just nowhere where we need. Just explain what this means for ordinary South Africans.
Well, it means a muddling along of our economy, which will mean no significant job creation in this type of, you know, growth rate environment. And that is what we actually needed most in South Africa, is job creation. I think it will mean more restraint by companies that will just try to survive in this low growth environment. Which will mean more margin squeeze. It might mean more job losses actually instead of any creation, because we remain below potential. Many mentioned currently the GDP potential growth rate is at 1.4% for 2016, with tiny upward revisions for the next year or two. But it really means to us that for 3 years we're going to grow below potential, and that will really to us mean no prospect of serious job creation.
I'm so glad you've brought this up. What does potential growth mean, and why are we not achieving that?
Well, potential growth would mean that with the current, available labor capital, what can you achieve with what is available at the moment? And that is what gives you the sum. It's a bit of a hazy figure, meaning that different economists will get different numbers. I think the Reserve Bank's figure is considered to be the most credible one, because they've got numerous models to work it out. You've got a model that's running from the labor side, labor capital ratios, and then you've got statistical ways that you could also work it out from looking at long-term trends in GDP growth.
Is it fair enough to say that as an economy we're being lazy, we're not achieving our potential, policies aren't at an optimum, we're not in the gear that we could be if we were making the right decisions?
That's exactly what it is. We need some structural changes to the economy to lift our potential. We need to change, for instance, some of our labor market.
And to even be at our potential.
Yes, yeah. So we need to do a few structural things to lift our potential. So at the moment, even if we grow flat out, it will be too low. The potential is only 1.4. We need, I mean, if you look at things like the NDP indications, we need 5% or 6% to achieve employment, goals in South Africa. So we're way off from that, limits that we should be. And, the problem is we only can grow, say, at 1.4 at the moment, even if all cylinders are running. And to lift that, we need some structural changes. We need to make the whole business environment more conducive for business to grow in, to create jobs, to invest. We talked about the low capital spending that we've seen in the first quarter, a drop of 5.1% quarter on quarter for private enterprises, shows you in South Africa there's no fixed investment spending happening. Why not? There's policy uncertainty. There's other problems that are hampering businesses from operating at their potential. So yes, there's maybe big stockpiles in banks and on the markets invested. There are money flowing around, but it's not invested to the benefit of South Africa for reasons such as political uncertainty, policy uncertainty, some of the fun and games that we've observed in South Africa recently.
Yeah, this is the refrain we keep on hearing, that we could make better decisions, we could lessen that give investors some certainty. Please stay with us. Elise Kruger, we've looked at growth. We'll come back and look at the outlook for our interest rates. What can we expect as the year continues? Stay with us.
If you look at artists, they've got one of the abilities to either form new conversations, they can paint a picture of a country, they can paint a picture of a mindset of a country.
The Cape Town-based ballet dancer recently won at the 2016 and 2017 Rolex Mentor and Prodigy Arts Initiative.
South African hip-hop right now is sitting at a level where it's Ngutu, Yippee and Roller. When you put them all in one room, you actually have like the ultimate super South African fan.
And you're watching Trends. Do not go anywhere. Stay right there.
Catch Trends for that 1 hour weekly dose of arts and entertainment news every Saturday from 12 to 1.
What causes Parkinson's? How common is it?
Your research showed that it's slightly more prevalent in men.
Yeah.
It's equally affected at women as well.
Yeah.
And all races can be affected with Parkinson's. There is no such thing as one race is more prevalent than the other.
Parkinson's disease is the disorder of degeneration of the neurons, therefore exposes one to have those unwanted movements of the body.
I live my normal life. I wake up in the morning, I do some exercises here and there.
It's just a movement disorder. It's going to affect how he lives his life. And I think as a family, it's just helped us get a little bit closer and surround him.
Catch Health Talk every Saturday from 9 to 10 with Dr. Sillo Mutawo.
Certain choices in life lead us not to our destination. Prostitution will not.
Everything that I used to do then, it was something that I never thought of, I never dreamed of.
One bad choice in life led her to another.
Most of my clients, they used to ask me a question, what am I doing in that industry? Because it does not suit me at all.
Her demons haunted her until she changed her life.
I used to pray that, Lord, if you can deliver me from these drugs, I promise you that I will serve you for the rest of my life.
She has since found peace and is serving her community.
We'll try by all means to spend time with all of our kids.
Join your host, Buleng Mulabati, every Friday at 17:30.
From the moment you start your day.
My biggest question is how I got myself here on time.
Yeah.
This is so early for a comedian, I gotta be honest.
We are there for you. We bring your morning into perspective.
As news breaks throughout the morning,
is an investment into the future of the airports company, but also the future of our children, the future of our country, the future of the transport sector.
We'll make sure that you get the full story.
Give us quality music.
Load shedding. Listen, this winter.
It's a thing of the past. And you can count on the weather team with expertise.
Join us live at 6 a.m. daily.
Welcome back. We're bringing you a special broadcast on our interest rates. The bad news that we were talking about before the break is that the Reserve Bank saying today that South Africa's economy is not expected to grow at all this year in 2016. That means we are in the risk territory for a recession, although the Reserve Bank expecting 0% growth. The good news, not if you're a pensioner and hoping for higher rates, but if you're in debt, as many South Africans are, the good news is that interest rates will not be going up. We are generally seen to be in a rate hiking cycle where those interest rates should be going up, but things have changed. And one of the better scenarios for our country, the Reserve Bank governor was talking about today, is a moderation in inflation expectations. Not inflation yet, but in the inflation that we're expecting in future. Now, of course, interest rate hikes help to curb inflation because it means that it's harder to borrow. There's less money basically in people's back pockets, so they can't go on a spending spree, and that demand often pushes up prices. So at least some better news on inflation. Let me bring in my two guests now. A new guest, Nganti Pillay from Nascent Advisory and Research, and of course still Elise Kruger from CAD Capital. Welcome to you. We spoke to you before. Welcome to you, Nganti. Let me start with these surprises that he was speaking about on inflation. Let me ask you about that. Just explain how expectations around inflation are changing.
Look, I think that one of the best things about our method of inflation targeting is that it works on what people think is going to happen, right? And so what the Reserve Bank is constantly trying to do is sort of manage those expectations. And, you know, what they've been doing with interest rates hikes is not so much to actually control inflation itself, because there's nothing really they could have done with interest rates. Remember, the volatility of the rand is not particularly something they can do anything about, because they, as they say, they don't manage the rand. They certainly couldn't do anything about, you know, some of the external factors that we've been facing. Food inflation that has been coming through has been a result of the drought, so there's nothing really that could come from that. And so increasing interest rates didn't have much of an effect, as it were, on inflation, but it has changed the way people see inflation going forward. So, for example, one of the things we want to show is to the labor unions, to say to them, listen, we are working on inflation, so don't go and look at higher increases, you know, because people look at inflation and say, look, if it's going to be at 9%, then I must ask for 9% wage increase. So what the central bank has been doing to say to them, listen, we are managing that, so don't go for 9. It sounds like
you're saying the Reserve Bank is playing a bit of a political role. Do you agree, Elise, or is there real information and some control over inflation?
No, I agree. I think it is definitely what we sometimes call open mouth operations from the Reserve Bank. You know, they can't actually do something about it, but they talk about that and they try to talk it down, because obviously if the Reserve Bank expects 9%, then everybody else is going to expect 9+. So, you know, and therefore the target band of 3 to 6% still have a very important role in South Africa, because it gives us at least our parameters, you know, within which we can say if inflation is there, the Reserve Bank is comfortable, you would not expect significant monetary policy tightening in such environment, and so on. You know, so but I agree with that. It's trying to address the expectations, and we've seen second quarter expectations mostly sideways. And if you think about the significant depreciation in the rand exchange rate in January, well, early from December onwards, I thought, you know, there's going to start to be a shift in inflation expectations into 2016, and it didn't happen. We still just get mostly sideways numbers, which are definitely good, and I think maybe that could one could conclude that part of this whole process is indeed working, as we don't see significant, you know, sort of upward expectations being marked into the surveys at this point in time.
And people are talking about better weather, so then that drought, at least the concern subsides a little bit. He was talking about the oil price, the rand strengthening. We may even see a petrol price cut next month. So if things stay the same, it's looking better for South Africa. Is that fair?
It is looking better on the inflation side, of course, because I mean, I think one of the things that we are starting to see also in agriculture is that even other geographies, remember one of the things that was happening, that with the rand, we're trying to also import, right, because we had shortages at home. So one of the things we have to do is to try and import where you can, and the weaker rand doesn't help you with that, and certainly also other geographies being producing. So we're getting some data coming from South America and other partners that there are some excesses coming through, so perhaps we will be able to get some food a little bit cheaper in terms of exports. But then at the same time, I mean, the rand can move anywhere, right? We are still going through Brexit. I mean, one of the things he mentions is this idea of Brexit. Nobody really knows how this thing pans out. It's, you know, in the next coming months, how does it work? How will it be resolved? So it's creating a lot of anxiety in people's minds. So that could still hit the rand. Remember, we are always volatile in terms of that. So that's one place you can't really hold back.
Elise, would you agree with me that Brexit has actually panned out better than expected thus far? People talking about a huge impact on the rand. The rand has strengthened incredibly.
No, I think that's one of those cases where, you know, it's very difficult to probably say beforehand, but I've read just in the past week a few of those, you know, forecasts expecting the rand to take quite a pounding afterwards. So it shows you just how difficult it is to call the rand exchange rate. I mean, that's the one thing that keeps all economists humble, is trying to forecast the rand exchange rate. So yes, indeed, and I mean, suddenly the high yield environment, you know, is again in favor, and we've got, you know, interest rates as we talk now, 7% repo, 10.5 prime. So if you are having the prospect of only minus or only 0.05, or in Euroland the deposit rates at the minus, you know, you're going to look elsewhere, even with the risk of South Africa, what we call a risky investment destination. You know, you've got, I would say, enough compensation with our current interest rate environment to still get the investments flowing.
What you're saying is that our rates are relatively higher, so investors come here for that reason. Is this a great opportunity? It seems like we've been given some breathing space. Firstly, indebted South Africans not facing higher rates as expected, and investors coming in rather than that dreaded outflow or having reason to come in.
Yes, we should use this window of opportunity that has been created by the stronger rand, you know, to, well, number one, imports, you know, like he mentioned to us, you know, slightly lower cost, but also it gives us opportunity where you don't have to hike your interest rates, say, for the next few months. It can help the economy to gain a bit of momentum, and, you know, hopefully we could get some form of structural developments going before December, so that by the time the next rating agency review is coming up, we don't have to be so anxious about, you know, compared to the past around. Because, you know, he mentioned that today in the Setjak and Yahoo as well, that if we do get a downgrade, the rand will take a pounding once again. So for now, we've got a strong rand, and we should use this opportunity that it has created for us.
Auntie, let's start talking about where interest rates are going. A lot of the journalists in that session afterwards were saying, what about the possibility of rates going down rather than up, given the low growth? What can we expect for the rest of the year?
Look, I mean, it's very unlikely that they would actually take them down, because part of what they have to do is to keep a little bit, to keep credible, right? And one of the things that we're emphasizing that we are on the upward cycle. So we're very clear we're on the upward cycle, and that's what the market expects. I suppose we can break throughout that upward cycle so that people sort of, as you are saying, you know, growth is not coming through. We are fairly comfortable about inflation, so we will break for a little bit, but we are not reversing the stance, because it can be very damaging to suddenly, you know, turn around. In any case, we still have our interest rates are still on a historical basis quite low. What you don't want is to keep hiking them, because it could damage. I mean, I think there's some numbers that have been coming through, especially around manufacturing. That suggests there's something there that might be a little bit of momentum. What you want to do is to keep that going, to allow that, you know, to stay there, because I suppose the rand is still much weaker than what it was. Remember, we come from 12, and this is some space, I suppose, for exports to get a little bit of a boost, and we're seeing manufacturing maybe starting to pick up on that. And of course, you know, so this is something that's quite important, to keep them where they are and not do anything for now, because we have to manage expectations, we have to stay credible. So I think one of the things that is unlikely is that they start cutting, because that could also hurt us. Remember what Elise was saying earlier, is that because they also still make us an attractive destination for money, so investment. So people do bring their money here because our interest rates are slightly higher. To cut them would actually endanger the rand, I think, in a little bit, which would actually exacerbate inflation.
All right, so you're basically expecting a flat line for a while. What are you expecting towards the end of the year?
I tend to agree with that. I think the Reserve Bank will not consider a cut unless inflation is in the middle of the target band, meaning about 4.5%, where we were last year. But I mean, at the moment, their forecast suggests 6.66 and a 5.5 for 2018, which I think is nowhere near the levels they would be interested in cutting interest rates. For the reason, well, number one, credibility. Number two, we know that they don't like to be on the upper end of the target band. I think they would definitely like to see it below 5 before they will consider to cut. But I think they could perhaps consider to keep it unchanged at this current level for a prolonged period. And I think we got used to unchanged interest rates in South Africa after the global financial crisis. So to have an unchanged interest rate, we are these days quite comfortable to see them sit on their hands rather than to hike further while this economy is so weak. And I do think, with today's growth number on the table, I doubt whether we're going to see another hike in the rest of this year.
I guess if there's no change, businesses, individuals can plan. At least it gives some stability. I really enjoy what you're both saying about the political role or the rhetorical role of the Reserve Bank. I hope that we can chat about that in future and the role of the Reserve Bank in this economy. Thank you so much for your time. Unfortunately, out of time. That was Anti Pai at Nascence Advisory and Research and Elise Kruger at CAD Capital talking about today's announcement. If you've just tuned in, the Reserve Bank Governor announcing no change to the benchmark interest rate. We will be back at the top of the hour with more news. Ciao.
Usisiwe Jamsana, SABC News, Alice.
Mzwande Lembe, SABC News, Doha, Qatar.
Kunatibingo SABC News, Alice.
Diabosito, SABC News, Geneva, Switzerland.
Nampumelo Siziba, SABC News, Moscow, Russia.
Sherwin Bryce-Pease, SABC News, New York.
Craig Murray, SABC News, Stellenbosch.
We bring the news back home. We keep the nation fully informed.
From the moment you start your day.
My biggest question is how I got myself here on time.
Yeah.
This is so early for a comedian, I gotta be honest.
We are there for you. We bring your morning into perspective.
As news breaks throughout the morning.
Is an investment into the future of the airports company, but also the future of our children, the future of our country, the future of the transport sector.
We'll make sure that you get the full story.
Give us quality music.
Load shedding. Listen, this winter.
It's a thing of the past.
And you can count on the weather team with expertise.
Join us live at 6 a.m. daily.
What causes Parkinson's? How common is it?
Your research showed that it's slightly more prevalent in men.
Yeah.
It's equally affected at women as well.
Yeah.
And all races can be affected with Parkinson's. There is no such thing as one race is more prevalent than the other. Parkinson's disease is the disorder of degeneration of the neurons, therefore exposes one to have those unwanted movements of the body.
I live my normal life. I wake up in the morning, I do some exercises here and there.
It's just a movement disorder. It's going to affect how he lives his life. And I think as a family, it's just helped us get a little bit closer and surround him.
Catch Health Talk every Saturday from 9 to 10 with Dr. Sillo Mutawo.
They say you can judge a nation's greatness by how it takes care of those who cannot take care of themselves.
Dollar Canal started on the initiative
of the NG Church.
Bana ba 29 from 10 years to 18. Bana bana ba tswa ka mahaeng a different. Ba bang ba neglected ke batswadi, ba bang ha bana batswadi totally ha ona batho ba ba hlokomelang.
It's the little things that mean so much more to the family of Bulukanang Youth Care Center.
Don't let your current circumstance determine who fetsa ko kae.
We celebrate these young ones with gifts of encouragement, hoping this moment will forever bring joy as they persevere.
A very big surprise for you guys. Tomorrow, local players are Chiefs Celtic. Because
we say baie dankie wat hulle vir ons kos gegee en alles wat die klere en die mooiste goedes wat ons gegee.
We are extremely thankful for what was done by the SABC today, because I don't think you people realize what a big donation it is.
We salute those who raise a nation. SABC Foundation, inspiring greater possibilities.
Live from Johannesburg, South Africa, you're with the News Today team. Thank you for joining us. With your headlines, I'm Kirshni Govender. It's just gone 1600 hours Central African time. These are your headlines. The Oscar Pistorius legal saga continues as the National Prosecuting Authority decides to appeal his 6-year murder sentence. Well, the Reserve Bank has